Let's go to Focus Go. Say what? And for that, we're joined by Jason Kelly. Thank you very much from Bloomberg. And of course, we still have Bill, and we have Bob Greer, and we've got from NASDAQ, and we've got Brendan. So we've got a full team. This is a great segment about quotes that you found, Jason.
Yeah, so this is a really fun thing we do. We sort of span the world, go throughout the Bloomberg empire, and we look at what the most interesting things people are saying that sort of gives us some insights into what's happening. So I want to start in the world of private equity and alternatives and Yale. So this is a quote.
As in university. Not Locke.
University.
Yeah.
Yes,
David Swensen, one of the best endowment managers on the planet, the most discriminating.
And when you talk to private equity managers and other endowment, they get this sort of wistful look in their eye when they talk about David Swensen, and here's why. What makes Yale tick is their ability to get great managers. These are Swensen's offspring. They have been inculcated, nurtured by the master. They're really the next generation. And now that's all fine and good, but when you look at the chart of how these guys have performed and you look at what we're calling the Yale premium, these guys are killing it. And David
As opposed
Swensen,
to Harvard, where they traditionally get killed.
I mean, Yale is the blue line there on top.
Yale is the blue line, and then the proteges are the yellow line there. And this is all based on looking at alternatives. I mean, that was Swensen's big deal, was forget the public markets, apologies, and and let's go to alternatives like private equity, hedge funds, and venture capital. VC was the outperformer here.
Hold on, Matt seems to be moaning over there.
Well, because, I mean, Harvard has a much bigger endowment, right?
Right.
And if you graph the two, as I have on my Bloomberg terminal here, you can see that Harvard is doing seemingly just as well.
In terms of asset gathering, in terms of how big their endowment is, who's put money in. But as far as performance
look at the performance. This is graphing the performance from 2002, okay? Ooh. Is it doing poorly in
those
comparison?
pesky little data.
No. What we're talking about is doing the best with what you got.
There you go.
Where Yale has performed better.
There you go.
I see. So you're saying that this is because they're just attracting more money.
Okay, so let's
and
go.
They're not performing.
That's actually.
I call that the Jennifer Aniston. 5'4", made herself a perfect 10.
Okay.
Angelina Jolie, born the Harvard.
Right, now it's time to make a turn.
I call it
a turn from the Ivy League to commodities.
To commodities.
Would you do that for us, Jason, please?
Why
quickly?
wouldn't you? So let's go to this one. This quote: "It would take a brave soul to wade in with both feet into commodities." Now, this is not a huge surprise to anyone who's looking at this market, but let me give you one thing about the Bloomberg Commodity Index. This is the worst performance since 2008. And as Bill Cohen and Bob Greifeld can admit, or can agree with, anytime you say the worst since 2008, that's bad.
It's not a good thing.
That's
Really bad sign. So it's interesting to see that what Goldman and others are saying is this may actually get worse. This is going to be a long winter.
All right, give us your third.
Finish up with the last one.
All right, third quote, a little more optimistic. On a valuation basis, this is not once in a decade. This is a multi-decade opportunity to be buying very cheap assets. So that's Michael Hassenstab.
Okay, hold on a second. Remember, this is Franklin Templeton, who's got outflows coming out their ears. They made massive investments in the spring in the energy space, in high-yield bonds, buying things at a $70 price, which then plummeted down to a $20 price, and they are losing investors in droves.
Oh, okay, but I want to be clear. I think he's talking about buying assets in emerging markets.
That's
in
exactly
Mexico and Brazil and things like that. It's specifically on emerging markets.
We can draw a line between these two, which is basically how do you feel about China? Commodities, emerging markets, ultimately both are a bet on China. If you think the landing is going to be hard and prolonged, then obviously who would wade in with one foot, much less both?
Right, exactly.